Welcome back to The Dive. Our guest today has over 35 years of experience in the investing industry. He will share his current strategy, insights about the proposed tax bill. He'll talk about the debt ceiling, offshore bonds, equity markets, and cryptocurrency. He is the founder and managing partner of Oxbow Advisors. Ted Oakley is joining us today. But before we bring him on, consider helping us make more videos for you guys by subscribing to our channel below. Hey Ted, welcome to The Dive.
Thanks, Cassandra.
Okay, so let's start off with the proposed tax bill. The bill would raise taxes on corporations and the wealthy. What impact do you think this will have on the market?
Well, I think not so much maybe in the next month or so, but I think long term is what happens. And that's just when you look at it, companies, particularly private companies, will probably more reticent to sell because they'll be paying more taxes on capital gains. And so I think people will look at it from that standpoint. And then from an ordinary income standpoint, that's an increase, but not anything like the capital gains. I think that'll have a bigger impact on what happens. And it'll also impact the public corporations too, in terms of them raising those taxes and then decreasing those profit margins. So that's sort of the way we see it.
So from a macro sense, do you think raising taxes in this environment makes sense?
Not particularly. When you look at it, what should be happening is we should be having, people taking responsibility in Washington for that. And what's happened is they decided really the last few years to spend so much money that they decided, well, we'll spend all the money and then we'll do the tax. And the taxes won't ever even out to what they're spending. So I know they can make a case for it in the long term, but it never works out that way.
Okay, interesting. So every couple of years, it seems like the media can't stop talking about the debt ceiling and the risk of a default. At this point, do you think investors should really have concerns about a default?
I do not, Cassandra. I think what's happening now is just a political standoff. Really, the GOP wants really the Democrats to pass it, so it's all on their ticket, and it becomes a political thing. The GOP they've raised the debt ceiling as much as anybody else, and so this is not a political thing for me. I'm just saying that it has become political for them, but I think they'll raise it no matter what.
Okay, so we have to ask about Evergrande. We've seen iron ore prices down and some talk of a few portfolio managers and high net worth individuals taking a haircut on offshore bonds. What do you think the likelihood is of contagion?
I don't see a contagion from that. I do think it will have an impact on their bonds, on Evergrande bonds, which it already has. I think they're 28 cents on the dollar, but I don't see that carrying over to other countries. Maybe a few, but in general, I don't see that happening. I think that will be germane to China and to Evergrande.
Okay, good. Well, let's talk about your investing strategy. How are you positioning yourself given the current market environment?
Well, Cassandra, we have three strategies. They're all different in one aspect. That we have one conservative income strategy that is really conservative, and it's still that way. Very, very safe. Doesn't make a ton of money, but it also has no risk of loss. Secondly, we have a high income strategy, and that really designed to beat the bond market, which it has. It's having a great year this year. And then we have a growth strategy. And what we look for on the growth side, we're looking for companies that can grow at 15% a year, that we think can grow for long periods, 5 to 7, 8, 10 years. And then we also own a fairly substantial investment in energy. We have for the last year. It's probably in the high income strategy. It's our largest position. So we like different things from most people probably. We're real high on energy, high on companies that we think can make good profits the next 5 years. And we're really not into the bonds. I don't think we bought a long-term bond past 2 or 3 years. I don't think we bought a long-term bond in maybe 15 months or so.
So what are your thoughts on investing in crypto?
Well, I think, I write about that in my October market letter. And one of the things I say is that, look, I'm not I'm not discounting the fact that you're going to have decentralized finance or that you can have some cryptocurrencies that do really well. I think that's probably the case, but it's not 6,000 of them. That's the problem. And so when you get into that area, I think what's really happened too, I think it's become something in one way, a get rich scheme for a lot of the cryptos that really shouldn't be having a value at all. And I think eventually, I write about this in our October market letter, eventually it becomes like the tulip mania, 1700s, or 17th century, which is people looked up one day and said, hey, this is just a tulip. And I think someday they'll look up and say, hey, there's nothing here. Not to all of them. I don't mean that in a total sense, but I think to many, many of them, that's what'll happen.
How big of an impact do you think movements like Wall Street Bets and apps like Robinhood have on how we should evaluate equity markets?
Well, I think when you look at Wall Street Bets and Robinhood and those situations where they're looking at, buying these meme companies, that will go away in time. Once you get back to a level playing field where, there's some, what I call sanity back in the markets, that won't happen. One of the problems is a lot of people invest in those are younger. I think, unfortunately for them, they hadn't had a shot the last 10 years at making a lot of money in a conventional way in stocks. And this has become something for them where they can participate, make money quickly, really get into what I call the digital game with all of that, but it goes away in time. And that I've seen it happen before. I saw it in the late 90s, and it's the same thing. It's a mania, but it goes away in time.
Yeah, totally a fad. Okay, Ted, well, thank you so much for joining us on the show. Just for our viewers at home, you mentioned your newsletter. Where can they find it?
They can find it at oxbowadvisors.com. We'll have that newsletter posted in about 5 days. But look forward to anybody visiting the website. I hope you get a chance to read it.
All right. Thank you so much. Have a good one.
Okay, Cassandra, thanks.
Thanks so much for watching. I'll be back again tomorrow. But in the meantime, smash that subscribe button for me, please.